Good morning. Thanks for having me.
So your stock, you posted a beat when it came to profit, stock moved higher, but you made some comments about China that seems to have really impacted investors. Shares down more than 5% right now. Give us some more color about what you're seeing in China and how long you expect the sales declines there to continue.
I mean, China for us has only a minor impact. So in my opinion, that can't be the reason for the stock decline. Chinese markets, we have seen for many years 1 million trucks a year. China is now for the fourth year in a row below 500,000 and no sign of recovery, which gives us a kind of a burden, about 20 million a quarter, no revenue. So in return on sales, it has a bigger impact due to the structure of our joint ventures there, but it's not the decisive one. I think more important is what we see in Europe. We are exactly what we prognosed. We will have a difficult first half. We have it the first quarter. Despite that, we have a very decent profitability in Europe, a very good profitability for the entire company. In Europe, it's all about how will the second half be? And we don't see at the moment a sign of recovery, but it might come in the next couple of months, as all forecasts tell us.
You know, Martin, I want to ask about some of the macro factors on your business. You mentioned some of the strength of the United States, where we've seen a higher for longer situation when it comes to rates. When you talk to your customers, what are they telling you about currently the cost of capital and the outlook when it comes to rate cuts, both in the U.S. and in Europe? How is that going to impact at least the communications you're having with them? How do you expect that to impact their orders going forward?
I mean, U.S. is very strong, and that despite on the rates, because for me, a truck, you buy only a truck not out of fun. You buy a truck because you need it, because you're afraid to be hauled, or in the U.S. at the moment, the entire vocational business is very strong because infrastructure investments are going on, raw material are doing well. So all segments of that are doing well, and they are not rate impacted. The rate has here only a minor one. When it comes to financing of big fleets, I would say this is any rate decrease will help. And I would say, especially in Europe, that's at the moment the cause of the hesitancy of many customers expecting that so they can lock into lower finance cost, for example. So a lot of talk in Europe at the moment, but no action.